the setback of missing out on a big day is a far better setback to have than the setback of blowing up because you're emotional. Who knows what's going to happen next? I don't, but I know as long as I don't over leverage, as long as I trade confirmation bars only, I'll get where I want to be eventually. Hey everybody, welcome back to another video. Today is Monday, November 4th, and I'm going to go over today in this video, I'm going to first go over just the trades today, the possible good trades, and then I'm going to look at work on that pattern recognition, and then I'm going to, well, you know what, I'll start with the part I was planning to save. The part I was planning to save is just a message to my future self. So this is a message to my future self. You can wait. You don't have to take every trade. The setback of missing out on a big day is a far better setback to have than the setback of blowing up because you're emotional. Take a break. You can always take breaks. Taking breaks is good for you. You don't have to trade. Focus on the first 90 minutes. Because that's where most of the action happens, and then just start checking back every hour or so. At the close of every hourly bar, or at the close of every 30-minute bar, because you got to get on with your day. So those are the reminders to myself. I'll probably make a second video about that, but I just wanted to remind myself. Secondly, before we get into the chart, I had a post on Reddit that went viral. 149 comments, 245 shares, 93% upvote rate, and almost 100,000 views. And my first ever award on Reddit. I've been posting on Reddit, commenting forever. And yeah, now I am here with an award. So that's pretty cool. So I also updated my plan. I'm not going to show my plan very much going forward just because it is private. You know, it is took me years to get to this level of having a plan, but I only have 100 something followers on YouTube. Even if my following on YouTube blows up, most people aren't going to come back and watch my old videos. So this is just for people who watch now or in the first 100 subscribers. This is my plan. And then, do I have my tripwires? No. I've shown those already, but yeah, this is my plan. Really important part I want to touch on that I worked on today with my good buddy, good pal, Russell. Shout out, Russell, if you're watching this. I got my risk management down. So 2 to 3, it's much lower. This is going to be much more sustainable. And I'll actually be able to follow this and make money from the stock market doing this, respecting my plan. So want to risk ideally just 1 to 2% of my account. So if I had a $25,000 account, I would just risk $250 in every trade, which is about one contract of ES. But I could risk 2%, but, an important thing to note is, here, probability. Now, I think I'll have about a 70% win rate, but to be, cautious, conservative, careful, let's pretend I have a 60% win rate when I follow my plan. There's a 1 in 100 chance that I will lose 9 trades in a row. So if I'm risking, if I can lose 9 trades in a row, and I risk $250 a trade, 250 times 9, well, 200 times 9, it's 1,800, and then 50 times 9, 450. So $2,250. if I risk $250 a trade. Um, so, I mean, the odds of this are incredibly low, 1%. But if you were getting a surgery and, there's a 1% chance you could die, 1%, that's like a very, very risky surgery. You don't want to, you like only want to get that surgery if it's like you have to get it to live. So, you know, I just have to be cautious and be very careful about my risk. I'm going to try and follow my risk to the best of my abilities going forward. But yeah, I added pivot points to my chart too. Going to use these just based on the context of what's going on. So S1, S2, or yeah, support 1, support 2, resistance 1, resistance 2. If we gap to one of these and we're in an uptrend on the daily and hourly, then maybe that means we go up and at least push to level 2. If we, gap way above and we're in a downtrend, it means it's probably going to push down. Just I'm going to use these the same way I use, these key levels here, just as a place to, just treat them as support and resistance, but keeping in mind that it depends on the context of what's happening, what's going on. This was the day I went on tilt. I went on 2 days of tilt last week. This was the first day. And I said I will not trade unless we are at a key level. And like not even the resistance 1 pivot level was hit. So that's just great. And then this day we opened at the prior day low, the prior week low. We pushed down very hard, and yeah, that day we should have just kept on going down, but we should have only been short today. And there's many shorts I could have taken. I already went over them all, but so I won't cover that. But yeah, I just want to cover today real quick because I want to start getting back into the swing of things. So we opened near the prior day low, and we pushed down. So at this point, we're in a bearish market. I'm starting to think that it's pretty bearish, but it failed and pushed up. And I don't really think I would take any trades in here. I think bar 9 is a decent risk bar because it's so small. So you could just trade, a break of this bar high, maybe up to here, and just go for like a 1 to 2R and capture 4 or 5 points. Best trade today, though, is the short trade because look what happens. We go up to this level, we break the prior day close, rejects, makes a lower high, comes back down, doesn't get any higher than that lower high. It kind of retests it, but then comes back down. And then what happens? Bar 22, we break the low, or we get to the low of the range. Bar 23, we break the low of the range. I thought bar 24 was a good short bar, but my friend, when I analyzed this with him, my trading friend who helps me, profitable trading friend, might I add, he thinks this wasn't a great short bar just because it's already kind of made some of that move. And I totally see where he's coming from because like if we look at it up to this point, the ATR is pretty low. I mean, I guess it is 5, so it is pretty high, but like relative to the other bars today, it's pretty low. And wow, that is like that is a small relative bar, but the fact that I mean, you can definitely tell by the size of this ATR that the election is tomorrow and that it's a big week. But if you did take the short bar, this probably would have been the best short bar here. But that's a big risk. That's like 5.5 points of risk, which that's probably not that much. I guess it just depends on your leverage. Like 5.5 points of risk shouldn't be that much, and you can target this point here. You could target S1, support number 1. You could go, but everything we want to do comes from the hourly, right? So best thing to do is probably say, okay, we stopped here, we came back down and pushed here, came up, pushed back down, pushed back up. We're probably going to at least push back down to this level. So getting short around the 9 EMA up here is a good thing to do. And then just target this low. And that would have been like 30 points. And that would have been a killer day. Or just 20 points. But 20 points is still a killer trade. And it could have happened. And, if you tried getting short here, you wouldn't have been able to get short because we didn't have a break of the prior bar low. Wouldn't have got short here. But we would have got short after this signal bar. And you could have taken this, down to here. Or down to here. And got 30, 35 points out of it. And even if you only targeted, 1 to 2R, you still could have, got 10 points out of it. But I really think the smart thing to do would have been to just initially set your take profit here. But then once you see how aggressive we're flushing down, you could have just moved stop loss to break even and said, I'm just going to trail the close of each bar. So after this bar closes, move the stop loss here. After this bar closes, move the stop loss here. And then after this bar closes or this bar closes, it's like you've already moved so much. You've reached the daily ATR. Might as well just take profit. So that's the best move of the day. Bar 34, we kind of get a right side of the V action. So, you could have got long from bar 32 as a signal. And you could have just targeted 1R because it's a counter trend. But it's a reasonable counter trend because it's a right side of the V. And, that was just a really strong extension. So, it's a pretty safe to just maybe target the 21 or just target this. I would have targeted the 21, but you could have targeted this support here. Support number 1. And then the rest of this is just BS range. I would not trade any of this. If you check the close of every 30-minute bar, you could have come back and at 125 seen this hammer down, said, all right, that looks kind of bearish. I'll take a short off of that. And you could have shorted down to resistance, made 5 points. Or you could have gone past resistance to this key level here that bar 44 targeted. 30 bars later, it targeted it again and hit it. So this is my bar by bar price action analysis. The biggest thing is I want to focus on the first 90 minutes. So how would I have stayed, 10 minutes, 15 minutes after to catch this big move down? How would I have avoided this crap? Well, it's a good question. I think I probably wouldn't have avoided it, to be honest. Just knowing my personality, I probably would have said, all right, we pushed down too much. We're coming up. We're looking long again. Looks like it's starting to flatten out. I would have probably been biased to the long side just because of this action here, We pushed down, we came up, we pushed down, we rejected to the down. I would have been thinking probably bullish at this point. Probably tried for some longs and maybe had some successful longs. Probably even tried for longs again here off of bar 19 or 20. I would have tried for longs. And I'm just being honest. That's probably what I would have thought. It's easy to look at the chart after, but looking at it like this. But then you also realize on the 15-minute, we're in a bearish environment on the daily. We're making lower high, lower low, lower high, lower low, lower high. So why wouldn't we expect this to just be another lower high? It chopped around a bit, so just ideally avoid trading this. But once it looks like it's setting up for the bearish move, try and hold and try and hold as long as you can, because there's 30 points there to capture. But it's just about focusing on those higher time frames, right? Like this noise down here on the 5 minute, it looks bullish. But if we come back and remind ourselves, looking at the 15-minute chart, looking at the 1 hour chart, we really are in a more bearish environment. So it makes sense to, especially after seeing this hourly close here of the 8 a.m. candle, that's a really good short signal. At the start of the hour, it's like a trap, like a bull trap. We make people think we're going up. But the way you can not get caught up in that and thinking it's long is just focus on the 15-minute, focus on the hourly, remembering the daily context, seeing that we're not, this is like an acceptance of the prior day close, but it does reject, and this is an intraday range. Once we break down below the intraday range, that's really like the signal that this is probably going to go much shorter. So bar 24, my friend who's a much better trader than me, profitable, experienced, thinks that's a bad short bar. I guess everyone's style is different because I still think, I'm looking at it in hindsight, but I think that's a good short bar. But you could totally see how if you thought this was a range, that this just looks like the bottom of the range, and it looks like a good bar to go long off of. This bar break. So it's so random, it's so hard to do the right thing. It's so easy to look back at the chart afterwards and say what you think is right. But ultimately with these videos, I'm just trying to build pattern recognition so I can be a better trader. Just realized I had the NASDAQ daily up the whole time, but it looks pretty similar to ES. We're below the prior day low, so this should all be short. And yeah, waterfall down if you were able to capture it. So if you captured it, sweet, good job. And if not, I didn't capture it either. I'm waiting for a deposit to hit my account, and then I'm going to start trading again probably on Thursday after interest rate, after election. I'm just going to take it easy. So that's my video for the day. Thank you for watching. I know my final message is it's all inside me. I know what I have to do to become profitable. I just have to do it. It's simple. My problem is I just overtrade. I need patience. I need friction. So I just need friction. It's that simple. I need friction. Bar 9 long. Target up here. Get out. Break down. Go short. It's hard to say, or it's easy to say, and it's easy to look at a chart after, but doing it live time is hard, and I just need to be patient, have friction, recognize the bigger time frame, that is what controls what happens, not the lower time frame bias. I think that should be pretty obvious for my trading plan. Yeah, I'll say 1 hour structure / trend. Structure. Maybe I'll just say higher time frame. I don't know. 1 hour is probably easier to say, but 1 hour / higher time frame, structure, and trend. Okay, that's my video. I'm going to print my plan out. My risk is much lower per trade, so I'm going to be able to go slower, just risking 2 to 3% of the account. I know it's going to be really hard to like not risk a full ES contract here or here, and but I know, if I follow my plan and trust it, that I'll be fine in the long run. I'll be fine. Um, I know that for a fact. So, thank you for watching my video. I really appreciate you watching. I've been defeated, but I know I'm gonna come back, and it's as simple as just not over leveraging and following my plan, not guessing where to enter, not not seeing bar. I can find a reason to guess on like almost every single bar. And sometimes I'm right, sometimes I'm wrong. I can't look at bar 19 and see, oh look, it came down, pushed down, came up, and now it's double bottoming. I need to buy this and go long. Or see this bar 17 close and think, oh, I have to buy the close of this because two hammers up, we're pushing up on the day, we need to go up more. This is going to be a trend day up, stupid stuff like that. I need to just say, okay, if I did get long here, fine. But where would I target for long? Probably just up here, a 1R trade, get out. I see that it comes, I would have got lucky. And then, but I just have to focus on this market structure. Lower low, lower high, lower low, lower high, that type of thing. Lower high, new low. Need to focus on that. Focus on the 15-minute structure. Focus on the daily. Who knows what's going to happen next? I don't, but I know as long as I don't over leverage, as long as I trade confirmation bars only, I'll get where I want to be eventually. So it's going to happen faster than I think. I'm going to become a successful trader. Mark my words. I have that Naruto level determination, but I got to do the right thing and have the right structure and discipline and plan and patience, because I need more patience. So that'll wrap it up. I think I've already said that a couple times, but this is actually the end of my video now. So thank you for watching, and I'll see you at the next one. Peace.